So in the next few slides, I'm going to be talking about medical insurance, and I'm going to talk about it if the surrogate has it and if she doesn't, and some important considerations to keep in mind. But in general, the chances are that the intended parent's medical insurance will not cover a surrogacy pregnancy. So a lot of intended parents have this question, and 99.9% of the time, the intended parent's insurance company will not cover anything with a surrogacy journey. Once the baby is born, however, health insurance will kick in and cover the costs related specifically to the baby. So once the baby is born, the intended parent's insurance kicks in and then takes over. Paying out of pocket for the pregnancy journey, so for the ultrasounds, the delivery, the C-section, if that's going to happen, is extremely expensive, and it's not worth just paying that stuff out of pocket. It becomes ridiculous. Therefore, it's going to be the surrogate's health insurance status that becomes really important in this. So a potential surrogate will either have medical insurance or she won't. So let's first talk about what happens if the surrogate has medical insurance. Surrogates may have their own medical health insurance either through their job or through their married partner's job. And there are two important considerations if the surrogate has her own medical insurance. One, her medical insurance may not cover surrogacy pregnancies. So for example, TriCare, which is a health insurance provider for many military members, explicitly excludes surrogate pregnancies. So the best way to learn whether or not the surrogate has medical insurance that will cover surrogacy pregnancy is to call the insurance company and ask. It is that simple. Two, she might lose medical coverage if she switches careers or divorces or loses that link to the person who provided the medical insurance to begin with. And a way that intended parents can protect themselves if this happens is to buy secondary insurance. So what is secondary insurance? Well, secondary insurance is a backup insurance in case anything goes wrong with the surrogate's existing coverage, and it's meant to hedge your losses whether your surrogate loses her coverage or her insurance company refuses to pay pregnancy expenses. So the approximate expense to buy secondary insurance is about $2,000 through Art Risk. Now this expense is just to opt into the plan, but it does not include your expense in case you need to exercise the option. In case you have to exercise it, you'll have to pay about $8,500 plus $17,500. Now, that is a lot of money, but that is still less money than you would have to pay if you had to pay everything out of pocket. So do you really need secondary insurance? Well, maybe yes, maybe no. It's up to you and what your risk preferences are. So even if the surrogate loses her surrogacy qualified medical insurance, there will be other options available that will prevent intended parents from paying all medical expenses out of pocket. So for example, many companies offer medical insurance for a few months after the termination date. And there's even an option perhaps to purchase a COBRA plan. So there are different options in case your surrogate loses her medical insurance. But you don't have that assurance at the beginning of your journey. So you'd have to figure that out in case she loses it. So the decision to purchase secondary insurance should depend on your risk preferences. If you want to protect yourself no matter what and you're willing to pay the $2,000, then go ahead. So when the surrogate does not have medical insurance, you have two options. You can either buy medical insurance from the Affordable Care Act marketplace, or you can buy medical insurance coverage from Lloyd's of London. And each of these options have their pros and their cons. So the pros of going with the Affordable Care Act medical coverage is that these plans cost between $550 to $850 a month, plus co-pays, deductibles, and premiums. But the total cost of a traditional plan is about $11,000 to $13,000. The con of this plan is that you can only purchase it during open enrollment, which is between November 1st and December 15th every year, so not a lot of time. And another con of buying a plan on the Affordable Care Act marketplace is that these insurance plans are not specifically for surrogate pregnancies. So there's always a chance that an insurance company will come back and say, no, our plan does not cover surrogacy pregnancies. If it's not explicitly stated in the insurance plan, when you purchase the insurance plan, it's very unlikely that they will come back and explicitly exclude surrogacy journeys. And it's also important before purchasing a plan that you call them and ask them if they will cover a surrogacy journey. So you can largely eliminate this risk that the insurance plan will not cover your surrogacy pregnancy. And now let's talk about Lloyd's of London. So the pro is that you can purchase these plans all year round, and they're specifically designed for surrogate pregnancy. So there's absolutely no risk that the insurance company will come back and say, no, we are not covering your surrogate pregnancy. However, the con is that they are extremely expensive. The average total cost for a singleton pregnancy is between $25,000 and $29,000 and $42,000 and $44,000 for twin pregnancies. So it is very, very expensive, but you have no risk that they won't cover a pregnancy journey.